Yesterday, more companies sent in their third quarter earnings, the likes of Zenith Bank and Dangote Cement. I'm being joined now by one of the investment analysts at AfriInvest to talk us through some of these earnings, and that's Obianuju Nsofor. Obianuju, thank you very much for joining us.
Thank you for having me.
And we saw Zenith Bank's result. They're quite impressive, but was that result what you were expecting to see?
Yeah, well, definitely on a year-on-year basis, due to the fact that the bank has recorded gains in previous quarters, we expected Q3 2017 results to come out positive. However, on a quarter-on-quarter basis, this is not so. If you look at on a year-on-year basis, all the major line items recorded positive results. Gross earnings grew over 30%, which was supported by growth in interest income and non-interest income, unlike peer like Guarantee, which only relied on gains from interest income. So for Zenith Bank, despite banks' unwillingness to lend out to the real sector, we saw loans dip about 2%. For the 9 months 2017. However, interest income, interest from loans actually grew on a year-on-year basis, also supported by interest from government securities. Zenith Bank was able to rely on the high interest rate environment in order to buoy gross earnings. Also, for non-interest income, we saw an increase in the bank's e-business income, unlike that of GT, where it declined. The bank recorded improvements in trading income, but on a quarterly basis, the bank recorded a loss in trading income. However, the silver lining for its quarterly results would actually be for impairment charges. Impairment charges dipped significantly, about over 80%, and going forward, due to the improving macroeconomic landscape, we expect to see improvement in that line item. Overall, it was a decent result. I mean, PAT was up over 30%, and our outlook on Zenith still remains positive. Right.
Now, there seemed to be some kind of mixed performance amongst Tier 1 lenders. This week, we've seen GT Bank, Zenith Bank, of course, UBA. Now, what is the outlook for the rest of the pairs, like FBNH, ETI, and Access Bank?
Well, for these three banks that you mentioned, we are largely skewed towards Access Bank to return positive results for 9 months 2017. This is because the bank has a huge drive towards in order to boost its retail segment of the market, and this is evident in the company's performance over time. However, for that of ETI, the company is currently at a recovery stage. I mean, it declared a loss as of full year 2016. So, and this is because it suffered setbacks on its Nigerian operations, which account for a significant portion of its earnings. For that of First Bank, we are sort of positive, but not in the near term. They've had this drive of trying to reduce their costs. In terms of gross earnings, First Bank has actually done really well, but operating costs has sort of dragged bottom line and sort of limited the potential for bottom line. However, with the change in management, as well as the bank restructured about 8% of its loan book, in the medium to long term, we expect the bank to rebound. But largely, we are particularly interested in that of Access Bank.
All right. Now, for Tier 2 lenders, which of them are you exactly, or should we exactly watch out for?
Well, it would most likely be that of Stanbic, that's because Stanbic is well diversified in its operations, as well as the major characteristic of Tier 2 banks right now is that their capital adequacy level is sort of threatening, but these two banks have sort of, their CAR is currently at a safe level. So for that of Fidelity, previous quarters, we saw decent results from the company, and as well as that of Stanbic. So for 9 months 2017, we are particularly watching for those two stocks.
Right. Let's look at Dangote Cement. Of course, came out with its results. What do you make of that result? Were you impressed?
Well, yes, it was quite a strong performance. Gross earnings was up significantly. But however, what you look at is that as of last year, the industrial goods, not only Dangote Cement, they sort of adjusted prices in order to account for rising costs. And this in 2017 has sort of showed in their performance. So sales was up for the period, although volume didn't do as much. It was actually an increase in prices actually boosted gross revenue. Also, operating costs also grew on a year-on-year basis, but not as much as that would actually impact on the bottom line. Looking at PAT, it was also up. So overall, it was quite a decent and impressive result. Yeah.
Well, that's for you, but for a lot of people, that's not what they seem to be expecting from that company. Well, any other company in that space with a positive outlook?
Well, we'll have to look at that of WAPCO. Due to the setbacks they suffered in 2016, they've sort of rebounded in 2017. Like Danksem, they also increased prices. They also restructured some of their debts, and that has sort of trickled down into performances. So going forward, for 9 months 2017, we expect a positive performance from that of WAPCO. Also, we have a target price of about 16 naira in excess for that of WAPCO. It's currently trading around the range of 15 naira, which shows a potential upside in the short to medium term.
Now, despite the broadly, positive results so far, the equities market has not really, reacted in line with the company performance. What is the major driver for the market at this time?
Well, you're quite right. So far, Q3 2017 report cards have been released this week. We've not seen the market react as much as we expect. Looking at the trading days, the market was up on Monday and was also up yesterday, that is Thursday. But then again, Thursday's gains was just very marginal. It was just up 1 basis point. The market recorded losses as of Tuesday and Wednesday. But what you can say is that investors, early bird investors, sort of took position in prior weeks. If you look back on a week-on-week basis, you saw that the market gained significantly. So investors already expected these companies to release positive results and sort of took positions earlier ahead. And as such, when the companies released their result, they sort of booked profit, and that's what we have sort of seen. And also, looking at these companies, probably X40, they've sort of enjoyed positive returns on a year-to-date basis. I mean, UBA is up over 100%, and the banking index has sort of beat the benchmark index and the like. So investors have already recorded gains in most of the stocks. All
right. Now, as the general interest rate environment seems to be, moderating, give us a sense of how this can impact the equities market. Would we likely see a significant shift, from fixed income to equities?
Well, in the short to medium term, is highly unlikely. What exactly is driving the equities market now is the I&E window, which was launched in April 2017. So we've seen renewed participation from foreign investors, and also company report card has sort of been impressive so far in the year, and this is exactly what has been driving the equities market. For portfolio investors and the other players in the market, they will sort of mix between the fixed income and the equities market in order to have significant margins.
All right, so what should we be expecting from other sectors who have oil and gas, insurance, and consumer goods?
Well, for consumer goods, like the industrial goods, they sort of adjusted prices last year. We've seen the likes of Nestle and Nigerian breweries post decent results. 9 months 2017, we expect them to trend in that line. For the oil and gas, we're a bit neutral due to the risk and uncertainties in that space. For the insurance stocks, there's some sort of regulation going around that space, so we ought to see a bit of mixed performance as companies release their 9 months 2017 report card.
So what's your top stock pick across the sector?
Well, for the banks, we would go for UBA. This is because if you look at price to book for tier 1 lenders, it's sort of below average, which indicates a potential upside in the short to medium term. Also, Guarantee has sort of enjoyed premium. Sentiment has actually been positive for Guarantee, despite the fact that it's currently trading at a price to book of about 2.0 times, when for the tier 1 lenders is about 0.9 times, thereabout. For the industrial goods, we are majorly skewed towards Danksem and WAPCO for obvious reasons. Like I said earlier, for oil and gas, insurance, we are a bit neutral on that sector due to the uncertainties and risks surrounding that space. For the consumer goods, Nestle and Nigerian breweries, I mean, not only have these companies sort of posted decent results, they've also enjoyed positive sentiment from foreign investors. And as such, we've seen share price actually increase over the year for these stocks.
All right, so what's your outlook for next week?
Well, outlook for next week is going to be positive. I mean, we've seen the market dip on 2 trading sessions. As of now, the market is currently the market is currently on a week-on-week basis. It has currently recorded declines. So as such, we expect to see bargain hunting as early as Monday next week, so that investors can sort of take advantage of these stocks that had declined this week.
We saw that marginal gain yesterday. Are we likely to see another gain today or a decline?
Well, it's largely skewed towards, it can actually trade sideways there. About what we saw yesterday was that the market was red for most of the trading sessions. Then towards the end of the market, we saw some sort of gains in some key stocks, and that was exactly what pushed the index to close 1 basis point lower. So as of today, the market can actually trade sideways, but on a week-on-week basis, we expect the market to close the week in the red.
All right, and this week you would say, has it been beautiful for the equities market?
No, I would not say so. We did not get the reaction that we sort of expected from investors, which is because early bird investors had already taken position ahead of Q3 2017 result. But next week going forward, our short to medium term outlook remains positive for the equities market. I mean, companies are posting decent results. I mean, this is evidence in their report card, and as such, we expect investors to continue to partake in that segment of the market.
All right, thank you very much for your time, Obianuju.
Thank you for having me.
Obianuju Nsofor is one of the investment analysts with Afri Invest here in Lagos.